What's going on, everyone? We're going to talk about the Metaverse, and we're going to talk about the Metaverse Index, actually. So I'm sure you've heard of the Metaverse, but we're going to get into the Metaverse Index. It's actually an index that exists, and there's some big things coming as far as these people are concerned. So let's go ahead and take a look. So what's going on with tech anyway? Well, let's take a look at this index guideline from Ball Metaverse Index. This is version 1.1. Take note of the date, 17th of November, 2021. Now, what is the Metaverse and why does it matter? And this is from the Metaverse Ball Index website. At a conceptual level, the Metaverse can be thought of as the successor state to today's internet, just as today's predominantly mobile internet was built on top of fixed broadband internet of the 1990s and early 2000s. And while the technologies to design, enable, and support the fullest extent of the Metaverse are as far from the capabilities of 2021 as the 1990s internet is from us today, emergence of the Metaverse will revolutionize every industry, from healthcare to payments, consumer products, entertainment, hourly labor, and even sex work. Sure. In addition, altogether, new industries, marketplaces, and resources will be created to enable this future, as will novel types of labor, skills, professions, and certifications. The collective value of these changes will be in the trillions of dollars. In technical terms, the Metaverse is differentiated from today's web via new technical capabilities. For example, the ability for massive numbers of concurrent users to share a single, real-time, synchronous simulation. Or experiences, such as persistent virtual worlds, widely adopted, and new standards that enable interoperability of virtual goods and currencies. For example, Fortnite V-Bucks into Robux, a Prada dress that can be used anywhere, and a robust virtual economy that is broadly similar to that of the real world. For example, good creation, scarcity, trading, and hiring. Now, wait a minute. Who are these people and why are they saying this? Well, these people are known as the Expert Council. The Ball Metaverse Research Partners Expert Council is comprised of former executives from NVIDIA, Amazon's AWS and Prime Video, Match Group, Valve, Oculus, Facebook, Square Enix, the New York Times, Spotify, and Andreessen Horowitz, and more, as well as the former lead game designer and co-executive producer of games such as Grand Theft Auto V, Grand Theft Auto Online, Red Dead Redemption 2, and Red Dead Redemption Online. Now, hold on a minute. When was this done? Around the middle of November 2021? Okay, there's NVIDIA's chart. Okay, there's Amazon's chart. Okay, there's Facebook's chart. Got it. So they need a discount. And what happened to crypto during that time? Right, everything's tanking. Okay, anyways, back to the Metaverse. So they have their own market map, which is basically comprised of what they're going to be actually investing in. And it is as follows. You have number one being hardware, which is the sale and support of physical technologies and devices used to access, interact with, or develop the Metaverse. This includes, but is not limited to, consumer-facing hardware, such as virtual reality headsets, mobile phones, and haptic gloves, as well as enterprise hardware such as those used to operate or create virtual or AR-based environments, such as industrial cameras, projection and tracking systems, and scanning sensors. This category does not include computing-specific hardware, such as GPU chips and servers, as well as networking-specific hardware, such as fiber optic cabling or wireless chipsets. 2. Compute. The enablement and supply of computing power to support the Metaverse, supporting such diverse and demanding functions as physics calculation, rendering, data reconciliation, and synchronization, artificial intelligence, projection, motion capture, and translation. 3. You have networking, the provisioning of persistent real-time connections, high bandwidth, and decentralized data transmission by backbone providers, the networks, exchange centers, and services that route amongst them, as well as those managing last-mile data to consumers. Next, we have virtual platforms, which is the development and operation of immersive, digital, and often three-dimensional simulations, environments, and worlds wherein users and businesses can explore, create, socialize, and participate in a wide variety of experiences. For example, a race car. They can race a race car, paint a painting, attend a class, listen to music, and engage in economic activity. These businesses are differentiated from traditional online experiences and multiplayer video games by the existence of a large ecosystem of developers and content creators, which generate the majority of content on and or collect the majority of revenues built on top of the underlying platform. Next, we have interchange standards, which is the tools, protocols, formats, services, and engines which serve as actual or de facto standards for interoperability and enable the creation, operation, and ongoing improvements to the metaverse. These standards support activities such as rendering, physics and AI, as well as asset formats and their import-export from experience to experience, forward compatibility management and updating, tooling and authoring activities, and information management. Next, we have payments, the support of digital payment processes and operations, which include fiat on-ramps to pure-play digital currencies and financial services. Then you have content, assets, and identity services, the design, creation, sale, resale, storage, secure protection, and financial management of digital assets. Jasmine! Oh, sorry, I had to sneeze. Jasmine! Anyways, such as virtual goods and currencies as connected to user data and identity. This contains all business and services built on top of and or which service the metaverse and which are not vertically integrated into a virtual platform by the platform owner, including content which is built specifically for the metaverse independent of virtual platforms. Yippee. So, check the headlines, because guess what just came out today? New Fidelity ETFs will offer access to crypto and the metaverse. Fidelity to offer exposure to the metaverse. Digital payments with new ETFs. Fidelity enters the metaverse with a new ETF. ProShares Metaverse ETF begins trading. Now, the news is making you think that, this was just became a thing today. But if you look actually into this shit and you take a look at the filing, just go to Google and type in Fidelity Metaverse ETF. Then put SEC after it. It's going to be this one here. Metaverse. I don't even know if you get a date on this, though, but this was filed back in, again, November. Oh, I'm sorry. Subject to completion. Preliminary prospectus dated January 27th, 2022. Okay, that's right. This one was dated January 27th. It's going to be listed on the NASDAQ. This is the Fidelity Metaverse ETF. And it's, let's see what it's going to be investing in. Let's see, fund basics. Okay, so principal investment strategies. Geode normally invests at least 80% of the fund's assets in securities included in the Fidelity Metaverse Index and in depository receipts representing securities included in the index. Metaverse is a term used to describe the future state of the internet characterized by a network of both augmented reality and virtual worlds that can be experienced persistently and in a shared environment by a large number of users. The Fidelity Metaverse Index is designed to reflect the performance of a global universe of companies that develop, manufacture, distribute, or sell products or services related to establishing and enabling the metaverse. Okay, great. So anyways, it's, let's see here. The fund will invest more than 25% of its total assets in securities of issuers in a particular industry to approximately the same extent that the Fidelity Metaverse Index concentrates in the same security of issuers in a particular industry. Okay, but where are the stocks? The types. I wanted to read that before I get off of here. Okay, hold on. Stocks of companies that generate at least 50% of their total revenues from one or more of the following business activity categories are eligible for inclusion in the index, subject to thematic quality screens, computing hardware and components, digital infrastructure, design and engineering software, gaming technology and software, web development and content services, and smartphone and wearable technology. Stocks of companies with less than 50% of their total revenue from these business activities may also be included in the index if an insufficient number of companies meet the 50% revenue threshold. Okay, so one more thing. Hold on. Merging. So, let's see. Merging markets. Maybe it's not on this one. But they're going to be investing a majority of their funds in emerging markets. Well, I can't find it, but it's in here somewhere. Foreign markets, particularly emerging markets, can be more volatile than the U.S. market. Okay, but where did you say that in the perspective, though? Maybe it was the amendment. Okay, hold on. Companies engaged in metaverse activities may have limited product lines. Okay, hold on. These companies may rely heavily on intellectual property rights and may be investing in more developed foreign markets. The extent of economic development, political stability, market depth, infrastructure capitalization, and regulatory oversight can be less than more developed markets. Emerging markets typically have less established legal accounting and financial reporting systems than those in more developed markets, which may reduce the scope of quality. Anyways, that's what I got for you. The Metaverse. Woohoo! Yeah, I don't know. We'll have to see. We will have to see. Oh, God. Okay. In addition, as with other emerging market investments, repurchase agreements with counterparties located in emerging markets or relating to emerging markets may involve issuers or counterparties with lower credit ratings than typical U.S. repurchase agreements. So they're telling you they're going to do U.S. repurchase agreements with it. Special geographic considerations. Emerging markets. Emerging markets. Emerging markets. Emerging markets. Emerging markets have also benefited from continued monetary policies adopted by the central banks of developed countries. After a period of continuously raising interest rates, the U.S. Fed Reserve and central banks in other developed countries have reduced interest rates to historically low levels. To the extent the Federal Reserve Board maintains near zero rates, emerging market economies may benefit. Woohoo! There you go. Just wait, it's coming.